take a look at the first trading day of February 2025, and it was a decidedly red day overall on the back of the Trump tariffs that were implemented over the weekend, 25% on Mexico and Canada and 10% on China. Now, midday, it looked like there was some sort of deal around Mexico and them coming to the table and sending troops to the border, and that kind of led up. But the Canada one looks to be in place, and it's kind of unclear what exactly Trump is trying to get out of these tariffs. So certainly hit the market today overall, and you saw the Dow down 122 points, which isn't that bad. But then you move over to the NASDAQ, that was down 235 points, over 1% there. And the S&P down 46 points, down about 0.75%. Small caps definitely were hurt the most, though, small cap value. But if you look at the heat map for the S&P 500, you see Apple down over 3%, NVIDIA down nearly 3%, follow through on the AI sell-off last week, especially with NVIDIA. Broadcom down another 1.6%. Tesla was the worst, though, down 5% on the day. Microsoft and Google down a little bit. Meta was up about 1%, so that was the strong performer. Amazon, however, flat, so no real reaction out of there. But just broad-based sell-off, and it's not a shock. I have expected, as I said over the weekend, that this is a month that likely will see more volatility, and more volatility tends to be to the downside. And you kind of have this double whammy now of the overhang of Deepseek and the narrative shift that's likely happened in AI, and then you also have these tariffs that the market thinks that this is just a short-term thing, it's a negotiation tactic, and they'll lift it a lot like what happened with Mexico. And so it's pretty clear that there'll be some sort of a deal at some point. This is probably short-lived. So to me, this isn't really a real catalyst for a broad-based sell-off. But you combine that once again with the AI shift, and that is something that can't be changed very easily. The cat's kind of out of the bag with the DeepSeek news and the fact that the AI models just maybe don't need as much hardware and compute power as they did before, and that the winners that everyone expected in the AI race are not going to be the winners going forward. Right, it's going to be more of a mixed bag, and they have to rethink who are the ones that are going to come out ahead. And maybe it's not the tech companies, maybe it's the bread and butter businesses that utilize AI on much less cost, much less computing power, etc. So this is the market that we are in as we head into the month of February. We had the Fed meeting last week that really is keeping things kind of static when it comes to policy, at least for the short term. So that's not likely to be a catalyst. So that's where we're at. That was a red day in markets. You had some the biggest sell-offs were in things like home builders, semiconductors, autos, regional banks, retail. The outperformers were biotech, restaurants, waste disposal, entertainment, telecom, media. Those were definitely the strong parts of the market. The treasuries were mixed, though, and there was a bit of a flattener, okay? And that's really because of stagflationary worries. And, stagflation is never something the market wants to see. Let's see, the dollar index, that was up, about 0.5%. Gold, you would think gold would be weak on a strong dollar. No, gold finished up nearly 1%, 0.8% on the day. Bitcoin futures were up about 0.3% after a big drop over the weekend below 100,000, but you did get that bounce back at the end of the day. So that was the market today for the first trading day of February 2025.